everybody, and welcome to Pro Trader Strategies Market Commentary for Friday, April the 3rd. I'm Eric Wilkinson, and you may well recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that impacts the overall market with my market analysis. Well, I do that same thing in these daily market commentaries, but I layer on top of it some option strategies and, according to my rules, to implement those in and around the assumptions we come up with through that other analytical processes. All right, without further ado, let's talk about the overall economic data. And across the pond, we did get some PMI data. Now, keep in mind that PMI, Purchasing Managers Index, is data that is forward-looking, so we do like to look at it, but it's not the main economic data for the PMI that the European region looks at. But it kind of gives us a gauge as to what's going on. It's just not the flash PMI, which is the one we're really looking for. Now, remember, anything above 50 is expansion in the economy. Anything below 50 is contraction in the economy. So across the pond, we got some seriously dismal numbers. Now, remember, we were just at the precipice of going back above 50 not too long ago, just about a month or so ago, where we have seen those numbers just hovering below 50. Well, of course, coronavirus comes along and just literally craters these numbers. Across the pond, Spanish 23, that's well below 50. Italian 17, French 27, Germany 31. The rest of the greater European region, 31 as well for the services sector. Great Britain came in at 34. So all those numbers were somewhat in line with what's expected. But remember, this is a recessionary indicator because it's forward-looking. It's how these PMI numbers, it's one of the best forward-looking numbers that we have. So those are really dismal. One thing we did notice was retail sales coming in at 0.9%, expected to be 0.1%. So that's a glimmer of hope. I think a lot of that has to do with, I've been talking about this. Everybody is at home and on the computers, whether or not they are really working or they're on Facebook or they're buying with Amazon. So those things are going to be things that are going to be driving the numbers. We know that that the retail, like brick and mortars, are pretty much closed. So we are seeing some of those things move through retail sales. Now, here in the United States, it's Unenjoyment Friday, and it's probably, as we look at the equities, we're going to show you it's going to be an unenjoyable Friday because we got a pretty dismal number coming out of non-farm payrolls. It came in at negative 701,000. It was expected to be negative 100,000. We probably kind of saw that coming because we've seen those unemployment claims just go through the roof. Now remember, we've been seeing consistent 275,000 unemployment claims, which is really pretty decent, to be quite honest. But now that non-farm payroll change means nobody's getting hired. As a matter of fact, that being negative means that more people are being laid off, obviously, right, than are getting hired. Now, the unemployment rate, where we've been talking about 3.5% historical lows, and all of those things, spiked to 4.4%. People are saying we could see that number go to 10, 15, even 30% at the high end of some of these guidances. All right, so keep that in mind as well. All right, final services PMI for us here in the United States, which is the non-manufacturing PMI. That means stripping out the manufacturing sector, right? So it's a service sector indicator. Institute for Supply Management, it's the main one that we look at. It came in at 52.5, expected to be 43.5. So we got that number above 50, which I think is just astounding. This should be taking into account what was going on last month, because this is last month's number. Forward guidance on these service sector looking pretty good, which that kind of blew my mind. All right, let's look at crude oil. It's up into the 26 handle, moving back above this Fibonacci, which I haven't changed. It's a really long-term Fibonacci, and that is right there at $1.26. So that being a support and resistance area, feels like we are a little bit overextended. I haven't heard anything new out of the whole trio of Trump, the Crown Prince of Saudi Arabia, and Putin coming to an agreement on limiting production here, but they still seem to be pumping that out. We're talking about storage problems that where are they going to put all this oil? I mean, literally, the capacity is bursting at the seams, and if they continue with this, it is likely where we're going to start seeing some negative moves here. You saw me talk the other day about Canada, and a 55-gallon barrel of oil in Canada was cheaper than a barrel of Monkeys, which was right around $7. Now it's cheaper than a pint of beer. So continues to slide there. This is reflective of futures looking forward, right? But we're talking about at this time with that type of Canadian oil prices on the market. All right. Gold futures are moving higher here as we're seeing some weakness happen throughout the equities. That's pushing bonds as well up a point on the day. And we've talked about this, that 182, 183-ish really handle. That 183 handle is very strong resistance line in the sand there. We have bumped up against it 3 times. We usually say on the floor anyway, third time through. So if we start to see some more acceleration to the downside in equities, which I'm not, I kind of believe we might start seeing that. I mean, it is Corona Friday. Nobody likes to hold any stocks over the weekend lately, especially with what could happen over the weekend, and so people have a tendency to pare back some of their positions going into the Friday, especially that last hour seems to get pretty ugly these days. So we could see the bonds push back above that 183 handle there. All right, the VIX, it's starting to look like we're seeing a bit of a bottoming pattern here in the VIX, although the charts really don't do a whole lot of justice in the VIX. But to me, no matter where you're looking, you start seeing a chart pattern like that, it looks like it wants to revert back. All right, here we have the Dow Jones Industrial Average Futures. You can see we are very close to the lows of the day and the session. Yesterday we peeled back, or were able to maintain that above 9-day moving average, which anytime you're above that is short-term bullishness. Now that was a nice coup to get above there, but today it literally just opened up right below it and has continued to slide throughout the day, exacerbated by that non-farm payroll change being a lot worse than what we were expecting. The other thing I forgot to mention was hourly earnings actually went up, which is a little bit odd. All right, so near the lows of the day right now in the Dow Jones Industrial Average. I wouldn't be surprised to see it go down and test yesterday's low there towards the end of the day, which is going to look pretty bearish on the charts. Again, very reflective. The NASDAQ down 141 points on the day. Again, opening up basically right below that 9-day moving average and continuing. But I have talked about this time and time again. I think that we might start seeing some back and forth moves and test in between this level here and right in here. This Fibonacci is a very strong, because we got 2 separate Fibonacci's lining up at the same area. So I think we'll see the market kind of bounce back and forth in and around this area. So I'm not too overly concerned. We start breaking down below this Fibonacci right here, and that's going to start looking a little bit more bearish, like we have created lower highs, lower lows, and if we start breaking below this number, it's looking like we're going to test those that bottom there. Then we go over to the E-mini S&Ps, and the chart's going to look just the same. Again, below that 9-day moving average. We don't have the same point of control. That's well above where we currently are, but again, we start breaking down below where yesterday's low is right there. That is starting to look like we are doing the same thing with the lower highs and lower lows That would be the low, and we've got a bounce there. That would indicate that we are going to start selling off somewhere to a lower low there as well. Then we can check out the breakdown of the daily charts. These are 30-minute candles, and you can see pretty much off the bat, pretty bearish. We tried to get a little bit of a bounce on that actual non-farm pay, or not on the non-farm payroll. That was not very bullish at all. On the Institute for Supply Management PMI, Purchasing Managers Index, tried to get a little bit of lift there, but it was met by some strong selling. And as you can see, continuing to see that selling pressure, almost not a green candle in this daily breakdown here. And we are printing newer lows every tick at this point, it seems like. So continuing to see that bearishness. I don't think that that's going to go away heading into the close. I think people are going to be looking to cover positions. All right, well, having said that, yesterday I did a webinar on a call calendar, all right? And I talked about all the rules, what needs to go into this strategy in order to be successful. Well, in a sense, I'm not too overly worried about this if Walmart starts coming off, because what I've done is I'm selling calls in this expiration cycle, and I have bought some calls out here in this expiration call or cycle. So looking at that going forward, that is the May-June, and with the May-June, what I'm trying to find my pricing here, and actually, so yeah, the May-June there, 42 days. Looking at that, having the earnings in there, and I'm going to have to try and cover this short call that is in this month. So I'm looking for it to peel off, be able to leg out of those short calls, ride out the long calls through that earnings event. That is my idea here with this. I think that we're going to see a bit of a correction. It's going to pull. It's just like a rising tide lifts all ships. Same thing goes for on the flip side. As the overall market starts selling, they sell just about everything. So I ended up doing this strategy around this because I talked about why I went into this. You know, Walmart has that curbside pickup for groceries. I think that that has been really successful. They've got out all the kinks well before any of this pandemic started happening. And another thing is, think about this. There's going to be a lot of people that come out of, or a lot of companies that come out of this doing very well, because the shelves started getting empty and people started picking and choosing things that they aren't normally accustomed to. Say, for instance, the Walmart brand I talked about. I love salsa, and I have my particular salsa that I like to buy. Well, it was off the shelf. It was nowhere to be found anywhere. So I ended up trying the Walmart salsa. I think I like it better than any other salsa that's out there right now. So, or that I've tried anyway. Really good. So those types of brands, those brands for Walmart, that is their house brand, have higher profit margins for them. So that's going to drive the end a little bit higher as well. So anyway, I went in and did the call calendar where I am selling the May and buying the June. So really it's supposed to be quoted June, May, but I always quoted it from the front month anyway. So I sold the May one time, or for every one May I sold, I should say, I bought one June contract at the 125 calls. All right, so I sold the May 125 calls, the June bought the 125 calls in there, and I did it for a collection, or I paid $1.79. All right, like I said, like to see a little bit of a correction happen in there. I'll be able to cover my short calls, leg out of this spread. I'm just trying to use these short calls here to help pay for the financing of those short calls. All right, so that's the idea with this calendar. Now, I don't normally talk about legging out of spreads. I don't really think that that's always a great idea. But with two different monthly cycles going on, and with this type of strategy, this is one of the few where I say if that short call starts really decaying and is basically worthless, why have the risk on anymore? You've already profited from that collection of credit. So take that off and leave the one on that you have on as the long call, which has been financed by that selling of that call. If the market rebounds after that short call is basically worthless, then that's a great thing. We don't want that short call to start hurting us on a rebound, right? So that's one of the few times that I would suggest is a good idea to leg out of that type of trade. So that call calendar I have on, taking advantage of the volatility shifts and all of those things that's been going on is helping as well. So put on that Walmart trade. The other thing I did was Facebook. Now, if you guys remember in Facebook, I'm long Facebook from 175. So obviously Facebook has been coming off since then, and you can see it's accelerating to the downside at this point anyway. And because it's a Friday, I decided to roll this trade out to my covered call strategy out in time. And with that, like I said, I'm long Facebook 175, just trying to lower my overall cost basis on this. And I had on the I had on the April, which expires in 14 days, sold the I had sold the April 190 calls in there for about 35 cents, was able to buy those back for 6 cents today. And then basically selling the May, sold the 200 calls at 35. So was able to actually roll out in time and higher for the same price that I had originally sold those 190 calls for. So that's good. It makes that spread a little bit wider, right? Now I have a $25 spread, long 175, short 200. So if I get those called away from me, I've made that distance. And in the meantime, if it doesn't happen, I've got those short calls where I can overall lower my cost basis on it, on the trade that I have on with Facebook. So that's what we're continuing to do here. Lower that overall cost basis. I've lowered it by about $1 at this point. So break even on that. It's 174. It doesn't sound great, but at the end of the day, that's how we stay mechanical in these bearish markets, okay? That's what we should all be doing in a portfolio, looking especially in bear markets, doing covered calls when you want to continue to hold on to that stock position. All right, so I talk about all those rules in these webinars I've been doing, especially like the call calendar with Walmart and things of that nature. All right, so those are things that you can be doing right now to stay mechanical in these markets. It will allow you to sleep at night, you guys, when you know that you are staying ahead of the curve by doing these different things and waiting for that rebound to happen. All right, that's all I got for you guys, other than we got to go over this disclaimer here at the end of every webinar, because I need to make sure you guys are absolutely sure of what you are doing and knowing the risks involved in trading. You can lose money investing in the stock market or using option strategies. We are an educational company, so I am not trying to give you a solicitation to buy or sell this Walmart call calendar or anything else that I'm doing. All I'm trying to do is inform you guys as to how different strategies can help you increase your overall yield in your portfolio. It's up to you to do your own homework, come up with your market assumption. I am not trying to give you trade recommendations. I don't believe in the herd mentality. I might very well be wrong in this Walmart trade. So you might have a completely different opinion on it. What we're trying to do is teach you different rules in and around these option strategies in order to implement it around your assumptions. So that's why it's very important to go out there and watch my webinars, because I show you the rules that you need to implement a call calendar. What strike location? What is the duration? What is the exit strategy on these? And then once you have your assumption in and around something, it'll allow you to narrow it down to the right market or the right strategy, option strategy, in order to implement into your portfolio. Okay, that's all I got for you guys. I hope you have a great weekend. And if you can't take that, Take it easy.